Okay, so just something real quickly to go over before we start the rest of the video is if you look in the video description, you will also see that there is a link to 3 other videos that we made in the past of different trading sessions where in those specific videos we talked about out of the money options that you could consider versus at the money. And in those 3 videos with the links below, we also discussed the price differences when entering the trade between buying the at the money option versus the 2 out of the money strikes that you could consider on the same trade, as well as how the out of the money options performed in the trade versus the at the money option on the same trade. So those 3 videos may be something that you would like to go look at after you watch this video. Hello, in this video we're going to take a look at how you determine which options to use specifically for the standard option play on each of the levels, as well as the out of the money plays on each of the levels, whether you're taking bullish or bearish trades. And we're going to go through the process of how you determine for each level what are your specifically what are your out of the money options as far as taking trades at those different levels. Okay, so we'll start off here with the bull bear key price level. Okay, so as you may have seen in our other videos, we primarily talk about using at the money options as being your standard option play for a bullish or bearish play off of the particular level. So the first thing you do is you determine which level that you're taking the trade off of. So say as an example, we're taking a bullish trade off of the bull bear key price level. So our standard option play is that we're going to look at an at the money option that as being our primary option for that bullish play. And what you do is you take a look at the price of the level. 66.1975 was that level for today, and so the closest at the money strike for that for SPX is going to be your 66.20, and on a bullish play it would be the 66.20 call. Now, how you determine the out of the money options, there's basically 2 options that you can do on a bullish play from the bull bear key price level. So your first out of the money option is going to be the first midpoint above. So on a bullish play, you're looking at the first midpoint above as being the first out of the money option available to you, and that would be taking the 66.30.54 price of this midpoint, and what is the closest strike to that? It's going to be the 66.30 call on a bullish play. The furthest out of the money that you want to go for a bullish play off of the bull bear key price level would be 1 full level above. So that's 66.41.32. So in this case for today's session, if you wanted to pick the furthest out of the money call on a bullish play from the bull bear key price level, then you look for the strike closest to this, and that would be 66.40 call option. Now, if it was a bearish play, you would just do the same thing in reverse. So if you're looking at a bearish play, your standard option is still going to be the at the money, which is going to be 66.20 put. And your first out of the money option, you look to the first midpoint level below, since this is a bearish play, and we have 66.0897. Now the closest strike to that is going to be the 66.10. So that would be the 66.10 put would be your first out of the money option that you could consider for a bearish play off of this if you didn't want to use the at the money. The second one would be what strike is closest to one level below, and that would be this level here, because it's one level below, and that 65.98.18. What is the closest strike to that? 6,600. So that would be the 6,600 put. You don't want to go out any further than that if your play is off the bull bear key price level. So in general, it is what level are you trading? If it's a bullish trade off of that level, you look for the midpoint above being the first out of the money, and then the full level above the level that you're trading as being the furthest out of the money. On a bearish play, you look for the first midpoint below, what's the closest strike to that, and the furthest out of the money to consider is the full level below on a bearish play. Now we'll take a look at the other levels just so you can get the same idea of how it works on the other levels. So for example, if we were taking a bullish play off of the R1 level, and your standard play would be an at the money strike closest to the R1 level, and that would be, since this level is 66.41.32, then the at the money strike for a bullish play off of this level would be the 66.40 call. And your first out of the money option for a bullish play off of this would be the first midpoint above, so that's 66.52.10. The closest at the money strike to that is 66.50 for today's session. Next, you would look at one level above the level you're trading on a bullish play. So R2 is a full one level above. This would be the furthest out of the money that you would consider, and it is 66.62.88. The closest at the money strike to that is going to be the 66.65 call. Now, could you still pick the 66.60 call because this is close? This is close to the midpoint. Remember that SPX strikes go in 5-point increments. So you have 66.60 and then 66.65. So 66.62.50 is right in the middle. So this is slightly over the middle, so that's why it would be the 66.65. But in practice, yes, you could just still pick the 66.60 call because it is pretty close to the middle here. So, but the standard way of doing it would be to pick the one closest. The one closest is the 66.65 call, since it is over the midway point. If you were instead taking a bearish play off of R1, then you do the same process you did here. The standard play would be the at the money put, 66.41.32. So your standard play on a bearish play taken from R1 would be to get the 66.40 put. Your first out of the money option that you can consider would be the first midpoint below, that's 66.30.54. So that would be a 66.30 put. And then a full level below R1 is your furthest out of the money to consider. In this case, since it's 66.19.75, the closest out of the money to that is your 66.20 put. And it works the same off of each one of these levels. So just to go over, I'll go over two more examples here. We're not going to go over every single level because it's basically the same thing on all the other levels, but just we'll go over R2 and S2 now. So if you were taking a bullish trade off of R2, then the closest strike to that is going to be the 60.65 call. So that would be your standard option play. Your first out of the money option play would be to look to the midpoint above on a bullish play, 66.84.45. So your first out of the money option here is going to be the 66.85 call. Your furthest out of the one is going to be one level above, and that is going to be the R3 level, 6706.02. So that would be the 6705 call. Now remember that the space between R2 and R3 is a lot greater than the space between R2 and R1 and the bull bear key price level. So basically the spaces between all the levels between R2 and S2 are a lot smaller than once we start going above R2 and R3 and above, or S2 and below. So that's one thing that you want to keep in mind, that even though, for example, the R3 level would be the furthest out of the money, that the midpoint level is already 4 strikes away at 66.85 versus the 66.65 here. So you just have to keep that in context, that once you start trading above R2, let's say on a bullish play, that the R3 level is going to be a lot further away than, say, this level is from R1 or this level is from R2. So once you start getting further out, then you just have to keep in mind that if you're going to go one full level out, that is going to still be pretty far away. So once you start getting up to this particular level, say if you were taking a bullish trade off of R2, then you really just want to look at just the midpoint level. And the same thing here below. So if you were taking a bearish trade off of S2, okay, then excuse me, then as you can see here, the difference between S2 and S3 is about 43 points. So you, just like we did up here, where you would really just want to consider the midpoint here once you start getting past R2 on a bullish play. On a bearish play off S2, then the furthest one you really want to consider is the midpoint of S2, S3 on a bearish play below, because of how far it is away. Now, if you still wanted to look at a further out of the money option, then you would look to the one level away, like we were talking about, if you were doing a bearish play off S2. So this would be the first one, and this would be the second one. The same way here on a bullish play off R2, this is the first one and this is the second one. So that's the process on each particular level. So for example, if you were taking a bearish play off of R2, okay, then your first out of the money, remember, I'm just trying to reiterate this point. So from R2 down to S2, because the levels are more compressed, then there's two viable options here as far as out of the money, depending on what level, when it's contained within the S2 to R2. So for example, if you're taking a bullish play off of S2, then you're looking up into this range. If you're taking a bearish trade off of R2, then you're looking down into this range. However, once you start traveling out of here, if you're trying to do a bullish play off of R2 to then go to R3, then even though you still could pick this as the furthest out of the money because it is one level away, you just have to be cognizant of the fact that the midpoint level, once you start going above R2, and all the other levels above R2 are a lot further away. And the same thing for those below. So we'll just go through a couple more examples. So for example, if you were taking a bearish trade off of R2, then that is the you're looking for it to go down, and then so the at the money is the 66.65 put, and then your first out of the money is the mid R1 R2. So that's 66.5210, so that would be the 66.50 put. And then the net furthest out of the money that you would consider is the one level down, 66.4132, and that would be the 66.40 put. So just remember that on a bullish play, the at the money is your primary one, and you're using the strike closest to that main level's number. And if you're taking a bullish play, you look above for the first out of the money, and look above a half level, and look above a full level for the furthest out of the money that you could consider. On a bearish play, the at the money is going to be the same off of the same level. However, since you're looking for it to go down, you look a half level down for the first out of the money option, and then a full level down for the second out of the money option. So for example, we'll just go through a few more. R3, if you're doing a bullish play off of R3, then the closest at the money strike is 67.05 because this is 67.0602. Your first out of the money bullish option would be this midpoint above, 67.2759. So again, this is slightly over the halfway point, so this would be technically the 67.30 call, since it is over the halfway point. However, it is very close to the halfway point, so you know, if you instead wanted to do the 67.25 call, that would be fine as well. And then you have the full level above, which is the 67.4915, and that would be the closest strike to that would be 67.50. So that would be the furthest out of the money strike that you would even consider doing if you're taking a bullish trade off of R3. Now, if you were doing a bearish trade off of R3, looking to go down, then it's still 67.05 put, because that's 67.05 is the closest to this level, and then you're looking down a half level, 66.8445, so that would be 66.85 would be your first out of the money option, and then you have the closest strike, because this is one level down, is 66.65. So the furthest you're on a bearish play, the furthest you're looking down for an out of the money strike is going to be one full level down. On a bullish play, the furthest out of the money strike that you can consider is going to be one full level up. And that works the same on every level. So for example, here on S3, if you were doing a bullish play off of S3, then the closest strike to this is the 65.35 call. And you look up this half level, 65.5505. So the 65.55 call is going to be your first out of the money option to consider. And then your furthest out of the money option to consider is one level above, and that's 65.7662. So that's the 65.75 call. On a bearish play, you have the same off of S3. It's the same at the money strike. So in this case, 65.35, except it's going to be a put. Then you look one half level below, 65.1192. So your first out of the money option is going to be the 65.10 put. And then your furthest out of the money option is one level down, and that would be your S4, 64.9035. So it'd be a 64.90 put. Okay, so hopefully this is cleared up for those of you out here who were asking about this. We have gone over a few examples in some of our videos where we did show how the out of the money options worked out compared to the at the monies. But we had several requests from people that were wanting to see a little more further detail about using out of the money options in case they did not want to use the at the money for cost reasons, and how you determine what is the furthest out of the money on bullish and bearish plays off of each of the different levels. So I hope this video has been helpful to you, and thank you for watching.